Welcome back to my InvestEngine portfolio for my stocks and shares ISA for October 2023. We'll have a quick review of everything that's been going on in the last month and have a look on my account in just a couple of seconds. And in fact, today I'm going to log in via the laptop rather than the phone, because if you didn't know, you can actually log in to manage your own investments through your computer at investengine.com rather than using the phone if you didn't already know. So let's jump into my account and see how we've done over the past month. So as you'll see now on screen, my last direct debit did just go in. So that's £1,000 that has gone into my investments. Got invested straight away, and that now leaves us with a total account balance here, as you can see, of £11,396.82. Now, as you can see, September was a pretty poor month for the stock market. It pretty much went down all the way. I think the S&P 500 finished down about 5% for the month, which is quite funny actually, because when you look back through history, and you'll notice this in some of my other videos, September has been historically the single worst month in the stock market, and the average decline is around 1%. So September of 2023 did not disappoint this time. Now, October was looking to kind of start the same way. As you can see, we kind of went down just a little bit, but actually we've seen some decent recoveries over the past few days. Now, one thing also I wanted to show you, if you don't know or notice about InvestEngine, you can have a look through your performance at the different time periods. And I never really did this before, but for example, if you go up here and change that to 1 month, if you then scroll down, it will show you what happened to your investments over that last 1 month. So you can see the US stock market and Europe especially didn't have a particularly good ride, but emerging markets and the UK did actually have a pretty good one. The UK represented here by the FTSE 100. As you can see, if you just go down to the week, everything's actually green. So you can see the global stock markets have had a pretty good ride. Again, actually lagging the way is the US stock market here in the S&P 500, represented here at the top. But actually developed Europe, emerging markets, and the FTSE 100 has done pretty well. So that's just an interesting thing if you did want to kind of look at those short-term fluctuations of the stock market. Again, as I always say this, and I probably get boring saying this, I don't let those short-term fluctuations in the stock market make any difference to when I invest. And I always want to make my investments automated and as simple as possible. So I'll just put my money in monthly and just do that, because that suits me pretty nicely. Now, as many of you will know, my portfolio is a pretty simple one, just made up of those 4 different ETFs, with the S&P 500, with developed Europe, with emerging markets, and the FTSE 100 in the percentages that I wanted to lay out, which very closely mirrors what you'd get in a global fund. Do remember that this portfolio is shared, so you're welcome to have a look at it. I do share that in the link in the description below. And I also share another portfolio, again, one that you can have a look at. Please don't just go crazy and copy these kind of things. Do kind of do your own research and figure out what you want. Remember, I'm not a professional financial advisor. I'm just sharing my own journey. But if you do want somewhere to start and somewhere to have a look at your research, you can look at a fund like this one, like VWRP, in what I've called Index and Chill, which I should probably eventually trademark and get some t-shirts made of it. This is also shared, again, will be in the link in the description. You can have a look at this fund, you can have a look if it's right for you, but this might be somewhere to start your research if you do want something very, very simple. And on that note, as always, if you do want to get started with InvestEngine, I do leave a link in the description below. If you want to get started with a brand new stocks and shares ISA, for example, don't forget to click the link in the description. They will give you a free cash offer between £10 and £50, which has now changed. It used to be £25, but it's now between £10 and £50, which will be randomly allocated to you once you start a setup account and you deposit £100. Other terms and conditions always apply, so make sure you read through those and go through that link in the description. And thanks again to many hundreds of you who've done that, and I hope you've enjoyed your platform so far, and hopefully, fingers crossed, it'll be good for you in the long run. Now, rather than go through my investments one by one and just bore you to death saying how much each one's gone up or down, because I don't think that really adds a huge amount of value, let me just point out a couple of new things on the InvestEngine platform that I think might pique a few of your interests out there. So SIPs are coming to InvestEngine, which is quite nice. So I do have a current SIP at the moment, as many of you know, with Vanguard that I do share on this platform. So InvestEngine having access to self-invested personal pensions might be quite interesting to you if you wanted to start a pension on InvestEngine, or if you want to potentially transfer old workplace pensions, which is something that I did many months ago. Now, one good thing on these SIPs is they're looking to be pretty cost effective. If you have a look at what they've announcing so far in terms of pricing, we're looking at around 0.15% per year as an annual fee. And then that's going to be limited to £200 a year as a maximum fee that you'll pay. If you just compare that to likes of Vanguard, for example, that I pay at the moment, same, it's 0.15%. However, their maximum fee on Vanguard, I'm just checking down here on my phone, is £375. So that should mean that if you did have a pension worth £250,000 on Vanguard, for example, at that point, you'd pay £375 and no more. However, with InvestEngine, if I worked it out correctly with my maths, if you get around £135,000 in your personal pension, that will mean that your fees will then top out at £200 and then they won't go on anymore. Hopefully I've got that right. Anyway, that could be something worth having a look at, and I may actually open up a SIP on InvestEngine just to see how things go, because one thing you do need to know about SIPs is actually you can open as many as you want. It's not like ISAs where you're only allowed one of each kind in a tax year and you can open as many self-invested personal pensions as you like. They're not exactly the same as ISAs, don't forget. There is no tax benefit necessarily in terms of being tax-free. However, you do get a top-up from the government, and also that money is locked away. So just be careful on those things. So it's getting money up front now. So if you put in £1,000 in a SIP, you will get 25% topped up from the government as a basic rate taxpayer, and you can put in a maximum of £60,000 per tax year. Did used to be 40,000. So if you check now on the government website, it will tell you that you can put up to £60,000 into a personal pension. These are obviously huge sums of money, which most of us will never get anywhere near. But if you do have a bob or two, using a pension can actually be a very, very good way to protect it from the taxman. Various tax benefits for using a pension rather than taking it as income, for example. Again, another one of those areas, if you do have some complicated tax situations, do speak to a professional. Again, I'm not a professional advisor on that one, so do your own research and have a little look on that one. Now, the second bit of news is actually money market accounts are now coming to InvestEngine. So I'll just pull up a part of their website here and you can have a look at what you can get at the moment. So again, this just gives you another option in terms of where you might be able to invest some spare cash that you have in your account, and money market funds do that. So rather than necessarily tying your money up for a fixed amount of time, which you may get, for example, in a cash ISA, a money market fund can be a lot more flexible because you can draw your market in and out anytime, because it just is an ETF, just like all the rest of your investments. Now, as always, it's a variable rate. As you can see, the small print, make sure you have a little read there, but this could be quite an option. And they do have a couple, as they've said here. So look out for these two ticker symbols. You have CSH2, which is Lixor's Smart Cash. And then if you want Xtrackers overnight rate swap, that's XSTR. So have a look at those ones. They are available on the platform. And again, if you had some spare cash there, which may be an emergency fund or something that you wanted to have in a very low risk investment, this could be something that you might want to use. As usual, do all your own research and have a little look on that one. Just wanted to pay that onto your attention because I think that's quite good. And actually, those rates at the moment, especially based on those variable rates, that's pretty good when you look at what you might be able to get on a cash ISA, especially a flexible one, which you can pull your money out in and out without any long-term contracts. So really, it all depends on your personal situation, but definitely worth checking that one out. Now, just quickly back to the portfolio, just to kind of round things up, £11,396, we're up 4.89%. I think that's pretty good considering the kind of year we've had so far. I'm very happy to just continue dollar cost averaging. My goal in this account and my future ISAs really is just keep doing that year after year, getting that money in where I can and try and put as much away as I can possibly. I would love to be able to max out a £20,000 ISA this year. We'll see if that's possible. As you know, I kind of run this YouTube channel as a full-time gig, so it really depends on kind of various things that I have going on in the background, where my money comes from. And I do live pretty frugally in my kind of real life. I try and keep my expenses as low as possible because investing is a really, really important part for me to make sure I can kind of give myself some of that financial freedom, I guess, in the long run. But also, not forgetting to at least try and enjoy your life while you still have it at the current time. I think there's always a balance to be had with investing to try and get it right for you. And really, with investing in personal finance, it's absolutely personal to you to try and figure out what works. Even if it's a small amount of money, personally, my personal opinion is to absolutely get yourself invested. And I think with those smaller amounts of money, for example, have people in the comments, you often ask me, people say, I've got £50 to invest, I've got £100 to invest, is that enough? And my personal opinion will always be yes. I think that habit of getting your money invested and getting used to seeing your money go up and down and just kind of get the feeling of the markets, personally, I think that's really important. And I think it's a great habit to also just have money spare at the end of each month. Very few people in the UK and the US and most of the world have money spare at the end of the month to invest. So we are in a luxury position to be able to do that. So feel free to take advantage of that. Learn how to build wealth for investing over the long term. It can get boring sometimes. It's just like I say, it's like healthy eating and going to the gym. It sounds really simple, investing, doing it every single month, going to the gym, for example, not, letting yourself fall off the wagon, but actually in the end, you'd like to think it's worth it. Nothing is ever guaranteed. But really, if you can just be consistent over the long term, you should do pretty well. Anyway, I'll leave that for you there. We can have a look at the final of the 4 ETFs, how we've done. The US still very much leads the way. Will it continue for the next few years? Who knows? But the good thing is we've got the hedge of having the rest of the global markets here. We've got emerging markets, we've got developed Europe, and we do have the UK as well. Slightly overweighted on the UK side, kind of those boring stocks which do generate a lot of their money outside of the UK themselves. But really, I really like having a global portfolio here, because if the US doesn't perform, let's say over the next 10, 20 years, then of course those different markets will change and I'll have more money in there. Really, set and forget, nice and simple, just how I like it. As many of you will know, keeping things simple in your investing is the best way forward, in my view. Anyway, thanks so much for tuning in. Leave your comments below. Don't forget to drop me a like on the way out. And as usual, happy investing.